SMF trustee, Brian, very nice to see you. Various others are joining us, wondering who I am and why I'm blithering on aimlessly at the camera. I will explain all, I promise. It's just the nature of online sessions. Until the clock ticks over till 2 o'clock, which it has just done, I have to play for time a bit. Okay, so attendee numbers are still going up. For those of you who are in the room, bear with me while I, as it were, play for time, just while we bring a few more people into the room before I actually declare a formal start to the session. Watching the numbers go up, continue to go up. Good, it's good. People are still making their way through the electronic corridor to the to the room we're all in. Also, the YouTube light's gone on. Good. Right, I'm going to give it another 30 seconds. Where are we? 38. 40. Up. Numbers going up all the time. Okay, right. The clock's still showing 2 o'clock, which is the official start time, and we are. Sorry. So that is the formal start to our session. So I'm going to say good afternoon. Thank you very much for coming. If you haven't met before, I'm James Kirkup. I'm the director of the Social Market Foundation, and often to be found on these calls blethering away like a bad contestant on just a minute as we introduce things and get used to technology. The session today, we are running in partnership with our good friends at Fair by Design. You all know we're here to talk about the poverty premium in insurance and what can be done about it. We have we now got 59 minutes of the session left, because we've only got an hour, so I'm being relatively brief. Some housekeeping from me before I start handing on to you two others for their contributions. You probably heard the voice saying this session is being recorded. You may be able to see on your screen a note saying that this session is also on YouTube. So as we speak at the moment, this session is being broadcast onto the SMF's YouTube channel. Bear that in mind when we come to the question section of the session. We're very keen for all of your thoughts and contributions. So when you ask a question, hopefully you will ask a question, then your question will be preserved for all eternity on YouTube. I say we're a little, we're trying to be relatively brisk about the session today, not least because Tulip Siddiq is very kindly joining us on a very busy day for her, because later on she has to be in the Commons chamber responding to the government on their response to the SVB collapse and rescue. So we're very, very grateful, even more grateful than we ordinarily would be, to Tulip for joining us, and we're grateful to the rest of our panel. Again, I'm going to say as little as possible about the issue. Why are we interested in this issue? Because from an SMF perspective, and Martin is going to talk to you about the Fair by Design angle. From an SMF perspective, the SMF is a cross-party think tank interested in the functioning of markets in a social context, and so we think poverty premiums are pretty much key to what we're about. They're about the way markets operate and meet their social obligations. How do markets serve wider society, and where markets, in particularly essential goods, are unable to provide those essentials for people on low incomes at an affordable price, we feel that those markets aren't meeting their social obligations. And so hence we are interested in policy prescriptions that can start to address that and renew and restore the wider social consent for market arrangements for the delivery of essential services. That's us. That's why we're interested in doing this. Shortly, you'll hear from Martin Coppack. I think before we hear from Martin, we have a video to show you, because Fair by Design particularly are very intent, as we all should be in public policy, on including the voices and experiences of the people actually affected by the issues that we're talking about here. So presently, one of my colleagues is going to do a very clever thing involving the sharing of a screen and the playing of a YouTube. Here we go, the video.
My name's Zahada, single mum with 2 kids. And my daughter has also passed the driving test, and she's purchased her own car, and the insurance on that has been extortionate. I can understand why they charge the prices, but for somebody like myself who's got a very low income to be paying prices like that, and it matters where you live. My sister lives pretty much 5 minutes away from me in Deacon's Bank. The difference between where she lives and I live in a flat, she lives in a house. That's all my shelf. It's classed as my shelf and the rest. In this instance, my hands are tied. I didn't have £2,000 in my pocket. You know, my daughter didn't have £2,000 in her pocket to, let's just pay this. She'd already paid for a car. With her insurance, we decided to pay monthly, which they added 10% on again. So, because your income is lower, you have to pay a higher premium for insurance, and it's just crazy how they work. No, definitely not fair. They should have a uniform rule, and it should go by your claims. It should be one base rate for everybody, regardless of who you are or where you live. But I think we're all in the same boat, and I think our government should listen and actually listen to what we're saying, because I always believe the decision makers are the people, are the millionaires and the billionaires, that they don't really live our lives, do they? So why should they be the people that make the decision? They should consult us, you know.
And thank you to my colleagues for queuing that video in. I'm now going to hand over to Martin Coppack from Fair by Design, who are responsible for that video, and very much for bringing this issue to the fore. So, Martin.
Thanks very much, James. I'm going to keep my comments brief because I think Matt's going to come in a minute, give a presentation, and I'm going to follow that up. But just a quick intro, Fair by Design, we exist to eliminate the poverty premium, the extra costs poorer people pay for essential services. It's a lot of people didn't realise actually that insurance is now the biggest part of the poverty premium. And that's why we really wanted to get stuck into this with a piece of research. And I want to say immediately a big thanks to Zahada and the people with lived experience of poverty who fed into this, because a principle of us at Fair by Design is that people who live in poverty should be helping to design the solutions. I'll hand you over now to Matt.
Matt Oakley, I'll introduce you. Do my job. Sorry, Matt Oakley, the senior researcher at the SMF and the co-author of the report that we published earlier today, investigating that poverty premium insurance. So Matt's also sharing slide sharing. Hooray! It's a technological triumph this session. I'm not going to mute myself and let Matt talk you through the research.
Thanks, James. Before kicking off the results and what we found and recommendations, probably worth saying that the research here was informed by a new piece of research with around 1,500 people living in poverty, and a couple of in-depth focus groups, again with people with experience of poverty. So again, this is really informed by the views and experiences of people with who have been living in poverty. So first of all, just a bit of, I guess, broader context around what people in poverty think about in terms of poverty, in terms of insurance. What we found was the vast majority of people in poverty believe that car insurance is essential. More than half of people strongly agree with this. And as you see from the video we've just seen, this is about potentially getting to work, visiting family, potentially providing care, all sorts of issues, which makes driving a car really essential, which therefore means insurance is therefore essential too. It's not just cars though. 60% of people, 6 in 10 people think that buildings insurance and contents insurance should be classed as an essential. So very much here a strong feeling that alongside things like energy, food, etc., this is an issue of essentials. However, the problem is that people in poverty are less likely to have insurance, and when they do, they're more likely to pay more for it. So previous research has shown that The property premium is estimated to be around £300 a year for motor insurance, and on top of that, an extra premium for paying monthly in instalments rather than upfront, leading to up to a premium of around £500 a year. As we saw again in the video, a lot of this is based on where people live and things outside of their control. So the fact they're on low incomes. 66% of people we spoke to said that they thought this was unfair, that the premium should be based, and the premium shouldn't be based on factors outside of people's control, like the fact they have low income or where they are living. To provide a bit of, I guess, cost of living context for this, over half of people in poverty are finding it difficult to pay for their insurance amidst the cost of living crisis. And we heard from people in the in-depth focus groups of people having to give up insurance because they couldn't afford to make ends meet, and that leaving them in a really precarious situation with regard to potentially the fact they were still driving, but also just a lack of financial resilience if something did go wrong. Why does this matter? Obviously, you've heard it's unfair, that people think it's unfair, but it also matters because it leads to worse outcomes for people, families, and society. And there's a fairly straightforward way we've thought about the poverty premium here impacting on people. Firstly, on the left-hand side of the diagram here, that the poverty premium links, for those who have insurance, drives the cost of living challenges, and that can indirectly then lead to lower take-up because people are forced to give up their insurance. There's also a wider question here about the perception of the poverty premium and how that makes the financial services sector look. A lot of people we spoke to thought that insurance provided poor value for money, being aware of the poverty premium as being a part of that. And again, that led to this issue of low take-up. In turn, low take-up leads to worse financial resilience, not able to make ends meet if things kind of go wrong in life. And really that leading to a range of personal, societal, and governmental costs, which we outline in the report. So really, this is just saying that this isn't just a conceptual issue. This is something which really makes a difference to people, to society, and to the government as well. The big question then in the report is, where does the poverty premium come from? And I think this is where we try to work with both the industry, so the insurance industry, and also people who have experience of paying the poverty premium, and try and understand the routes through which people are paying the poverty premium. Firstly, we identified that people in poverty can pay more for the same cover. So this is really a value for money issue, that they're getting the same sorts of cover, and they have the same sorts of risk profiles, but they're paying more. That can come from, for instance, the need to pay monthly, which I've talked about previously, and also taking up things like single item insurance policies, which might be better met through a household contents insurance. So this is really about a value for money issue. There's also a second route here through which people in poverty pay more because they experience different risks, and so this is that people are paying more because they might have riskier behaviours or live in riskier areas, those sorts of things. So really, this is an issue around the market pricing those risks, and people paying more. The big challenge is that as a society, we don't really know which one of those two drivers is dominating, which means that, I think, as we highlighted in a range of discussions with experts, it's led to this kind of policy ping pong between the regulator and the government. So if you speak to the government, they'll say, oh, this is very much an issue for the Financial Conduct Authority. This is about, firms not pricing properly and actually discriminating against people. So this is very much an issue for the regulator to take forward. If you speak to the regulator, they'll say, well, actually, this is much more about a social issue, and it's just a case that firms are pricing things properly, but actually there's a whole range of issues, which means that there are societal reasons we might want to get rid of the poverty premium. And it's this back and forth, which means there hasn't been a huge amount of action on it. So what we try to say is, actually, we think there's a really strong case here in terms of what we can do about driving a better understanding of the shape and nature of the poverty premium. I guess we called on the FCA to, I guess, take forward and reframe some of the really good work it's doing already in this area, to start to publish statistics on the poverty premium and how that looks between different product types and different firms in terms of the insurance premiums that they're charging. We can then, with that understanding, start to think about how to tackle it. I mean, there's two routes here. Firstly, ensuring there's pressure on the market to tackle the poverty premium that's not related to the high risk profile. So this is the value for money end of things. In part, we think this is about, I guess, naming and shaming those firms who might be charging more for people on low incomes, but also a more significant review of the market for single item cover and whether that's actually providing value for money for consumers. And then finally, where there's an issue around the I guess the social end of the poverty premium, trying to think about how the government could develop ideas about using its power in the market to provide lower cost insurance to those who need it. So thinking about whether there's a case for a state-backed insurer for people on benefits, for instance. And again, we put a fair amount of detail in that in the report in terms of what we might consider. I promised to be short. I think I was. Hopefully that was short enough, and I will stop there and take questions later through RNA. James, back to you.
Magnificently punctual performance. In fact, on my running order, Matt was due to wind up at 14:15, which is exactly what he's done, because that actually allows me to bring in Martin Coppack after a brief taster of Martin earlier on. You now get the main course, which is his. You've heard from Martin about the organisation he runs. You're now going to get his thoughts on the research we've done and the issues under discussion today. So, Martin, before we then hand over to Tulip, Martin.
Thank you. Yes, it's the main course in 3 minutes from Fair by Design. So I guess we can all actually agree that we live in a country where we're encouraged more and more to take financial responsibility for ourselves. That could be like saving for retirement, saving for a rainy day, but also really importantly for financial resilience. It's around protecting ourselves and our families from shocks, income shocks. We're completely encouraged now to be good citizens, go to the market. So be very good consumers, go to the market to protect ourselves and our families. But the big question here is, what if the market doesn't want you? That could be because of ill health, past ill health, could be because of where you can afford to live. More and more, people are being deemed to be less desirable and not a good risk. And this is a situation that we only think is going to get worse as we move from an insurance model which is around pooled risk to one individualized risk. All part of the whole great risk transfer from successive governments to put risk on individuals. The problem here is that the market works ever more efficiently for the healthy and the wealthy. And the irony being that it doesn't work very well for the people who arguably need it the most. And as many people have heard me talk about this before, any consumer organizations or consumers themselves cannot question insurers because they will not share their information because of the competitive nature. And this leads to insurance being one of the most opaque markets in the world, leading to also big questions around adherence to equality and protection rights. So thinking here about Citizens Advice recent report on the ethnicity premium, for example. And when it comes to car insurance, this is compulsory. People need it for work, or if they're disabled, it's their lifeline. But what we're finding out from our research, it's really clear that people are feeling as if they are increasingly discriminated by a market. And that is most importantly, that feeling of discrimination, it's when it's over things that are not in your control, such as where you can afford to live. So what needs to be done? We need to break the policy ping pong. I've been talking about the policy ping pong for over a decade here. We go to the Treasury. The Treasury will say, we don't hear insurers complaining about this issue. You haven't got the data, go to the FCA, as Matt said. We go to the FCA and say it's kind of social policy. I've actually been in the room as the ping pong has gone round. I calculated, I think, maybe about 10 times. So there's one thing I'd love to go away from this session with, is knowing how can each of us play our part in stopping the policy ping pong? What can I go back to Zahada and say to her? How can I say to her that actually we won't just listen to her, we'll do something about her situation? And I think we just need to have a bit of a light bulb moment here. We all talk about cost to serve, rational markets and individualized risks, things like that. But at the end of the day, if you're a consumer in poverty, all you experience is a market that doesn't work for you and actually feels inherently discriminatory. So I look forward to the debate. Thank you.
Thank you very much, Martin. 4 minutes, you're sacked. But that gives me 1 minute before Tulip's allotted time at 20 past the hour. All is just to continue on from Martin's point there about the different roles everyone has to play. We are very, very grateful to the FCA and to the ABI and the industry in the form of Nicky Morgan. I'll introduce Nicky properly later on, for the fact that throughout this project everyone's been very cooperative. And I mean, bluntly, sometimes we do policy work in slightly contested areas, and we often find it's hard to get different people and different organizations and different bits of government and private sector to engage. In this case, that has not been the case. We're very, very grateful to cooperation and engagement we've had from everybody concerned. So we're very, very happy with that and optimistic that will ultimately lead to better outcomes at the end of all this. The clock has just ticked over to 20 past the hour, which is the point when I promised to bring in Tulip Siddiq, who's having a very busy day. Tulip, your thoughts, and presumably what will the seemingly inevitable Labour government do about all this when you're enthroned in 18 months' time, do you think?
Thanks, James. I wish I shared your optimism in quite the same way, but thank you for inviting me to speak here today. And just to say, a lot of what Martin was saying, I hear from my constituents time and time again. And one of the things I wanted to talk about is about how the question of how we address the poverty premium in the insurance market and how we make all markets work better for the poorest in our society, it's one of the questions I think is just going to grow in importance as the cost of living crisis deepens. I've certainly seen that from my constituents living in the deprived parts of my constituency. I've seen this come up over and over again. And one of my priorities as Shadow City Minister is how can we reduce the extra costs that poorer people pay for the essential services, and insurance is an essential service, or loans or credit cards. I'm really grateful because the Social Market Foundation and Fair by Design, all the research and work you're doing in this area and your brilliant new report really helps us, because in opposition, unfortunately, we don't have a host of civil servants behind us. So we do tend to reach out to our stakeholders and see what you're saying. One of the things I saw in the report is that 56% of the low-income people surveyed said they would find it impossible or very difficult to pay for an unexpected cost of £500 without outside assistance. But at the same time, the report pointed out that the high cost of insurance is preventing those on low incomes from protecting themselves when things do go wrong, which they inevitably do. And just 23% of people in poverty in the private rented sector have contents insurance, which is a really low number. It's having devastating consequences. So across the country, we've seen that people living in our poorest communities are being pushed into the arms of unethical lenders in their hours of need. And I don't want to be all doom and gloom, but I really feel like that's just going to get worse in the upcoming months. In my constituency, which I mentioned before in Hampstead and Kilburn, I've seen this happening firsthand. 14.4% of households are experiencing a poverty premium on essential services such as insurance in my constituency. It's particularly concentrated in parts of Kilburn, where a growing number of people are relying on unsecured credit when things go wrong. If you've ever walked down Kilburn High Road, you'll see the number of payday lenders and loan sharks, and also the gambling shops strategically placed right next to them. So I've really been experiencing this and really feel for my constituents who are caught up in this vicious cycle. So in my case, I'll be making the case in my role as Shadow City Minister that any incoming Labour government, if it does happen, needs to prioritise three key areas in the insurance market. First of all, I've said that we need to tackle the higher costs people pay for monthly insurance plans. For example, people who are unable to pay for their car insurance in annual instalments face an average extra cost of £160. And it's a damning illustration, I think, of how too often it's just more expensive to be poor, which is not how we want the country to be run. Secondly, the case I've been making, and you'll be pleased to hear I am already making it to Shadow Treasury, but really focusing on, is that it's simply unjust for people to pay more for car or home contents insurance because of where they live. So take car insurance, for example, alongside the extra £160 poorer that people are having to pay because they're on a monthly plan, they're also paying nearly £300 more a year for living in a deprived area. So there's a total poverty premium of nearly £500, which is outrageous if you think about it. And then finally, one of the things that I have talked about quite a lot is addressing the growing problem of people having no choice but to take out expensive insurance for individual items because they can't afford full home contents cover. And this is something that's come up in my advice surgery quite a lot as well. So a precious piece of jewelry they've inherited, or a painting, or whatever it is, they can't afford the full content, so they'll just insure that one thing, which will cost them a huge amount. So to achieve this, you're probably going to ask, what would a Labour government do if we came in? Well, we've got to work in close partnership with the insurance sector. We've got to make sure the markets work for the poorest consumers. And Labour in government would make clear to the FCA that our priority to address inequalities in the insurance market is top of our list. So, for example, a have regard for financial inclusion could allow the regulator to prevent practices such as insurers charging more to customers who pay their insurance in monthly installments. We haven't actually written our full manifesto yet. You'll probably know that, but these are the things I'm trying to advocate in Shadow Treasury. And I do believe that everyone should have access to financial services they need, whether it's saving schemes or insurance, regardless of their income or circumstances. But all too often, and your report demonstrates this very strongly, the most vulnerable in our society simply can't afford it, or are denied access to financial products and services that meet their needs. Just to mention a bit more on the report, I do think it explores some really radical potential solutions to the poverty premium problems in the insurance market. And I'm particularly interested in asking the FCA to investigate the poverty premium in insurance and to carry out a review of single term insurance cover. I think that's one of the things that we politicians can also help you. And Nicky and I have worked on many things together. We might have at one point been on different sides, but I think this is something we'd really agree on, because we hear these stories, real life examples, as you showed in the video, but also from our constituents over and over again. So I would like to help turn these proposals into reality if we could. And also, as we say, that we just have to make sure that we work with the FCA, because I do think it's something that's been left alone for a long time, and it isn't acknowledged quite in the same way as other forms of poverty premium are. And the other thing is, I think whether it's best done by requesting a formal focus investigation or a wider work stream, maybe it's something we need to go away and think about. But as a Labour Party, we're absolutely clear the FCA has a responsibility to investigate these issues, and if we are in government, we will be helping with that. I think, James, you did mention at the beginning, because of everything that's happening with SVP, I'm going to run to the chamber. But if there are any questions, happy to take them at the end. Maybe if you email me, that might be easier.
We will pursue you ceaselessly via email. Yeah, thank you very much for doing my job for me, Tulip, and explaining your imminent departure off to the chamber to hold the government to account on that measure response. And thank you very much for engaging with the point, our central recommendation from this report, which is on the need for that FCA investigation to bring more information to this, because bluntly, we've investigated, we've researched it, and we don't feel we are comfortable in saying how much of that public premium is directly risk price related, and how much of it is due to other things that we can't explain. And that's why we're hoping that our friends from the FCA will eventually shed some light on that. And we think actually that that's ultimately in the interest of not just the people in the market, it's actually in the interest of the industry as well, because that will bring some clarity to this issue and allow market participants to say, look, we are pricing in this way because of the following factors, as set out in the investigation. So hopefully this is a win-win for everybody, where everyone can get along and cooperate and solve the public policy problem, preferably in a cross-party way, which is why you're very kind to cue in Nicky Morgan, who is I was going to say formerly many things. It seems a bit harsh. Nicky has been a cabinet minister, has been chair of the Treasury Select Committee. Most importantly, has been a trustee of the SMF. But she's not my boss anymore and can't sack me, so I can be rude about her. But with all that experience from, I think also once upon a time Conservative as well. we'll ask Nicky to give us her thoughts on the best way forward here, how to resolve this in that cross-party collaborative public interest way. Nicky.
James, thank you very much, and it's a pleasure to follow Tulip, and good luck with the statement and everything else in the chamber shortly. It has been a busy weekend for lots of people. So I'm here, as you say, James, with a couple of hats on. Obviously, as a former chair of the House of Commons Treasury Select Committee, I oversaw an inquiry into the treatment of vulnerable customers in financial services, which I think was probably the first time the committee had looked at that sort of issue for a long time. And this work very much obviously feeds into that, but also one of the financial services roles I hold outside Parliament is as chair of the Association of British Insurers, and it's been a pleasure to talk to Martin in the course of preparation of this report with that hat on as well. So firstly, thank you to the SMF, to Matt Oakley and to Fair by Design for the report. And I think it's fair to say that the industry absolutely acknowledges the issue that is central in the report. I'm very keen, I think we all are, that trust in financial services obviously needs to be increased, and people need to be confident about the products that they are buying, and particularly that actually when they most need them at the time of most vulnerability, they are going to get a payout. And Martin, I take your point about financial resilience as well. Insurance is for some things like motor insurance, it's essential. For other things, obviously, it's absolutely the right thing to have. So to make sure that households and individuals are financially resilient. I think the important word mentioned so far has been collaboration, and the industry absolutely agrees with the need for it to work with the Treasury, with the FCA, and with organisations like Fair by Design, who are going to absolutely provide the case studies and examples as to the issues like Zahada is facing with motor insurance. As you've also already touched on, the pricing is complex. It is based on many factors, and I think page 40 of the full report talks about the factors which reflect risk, but also, as you said, James, the other factors which are unknown. Now, even at the ABI, when we have conversations amongst the ABI members, we have to be very, very cognizant of competition law. So there is a limit on what members are able to discuss with each other. We literally have to have somebody sitting in the room who is able to say that actually no discussions contravened competition law. But there has to be a way around this, and I take the point that actually being able to understand how pricing is achieved, how risk factors are weighed up. And I should just say the industry is very, very clear that there are many rating factors of pricing, but gender and ethnicity are never rating factors. So I think that's something to be assured of and to be certain about. But I do think the FCA have a role to play in helping to get to understand this pricing better, because I suspect that although industry can't reveal to each other some of the pricing factors, they can reveal it to the regulator. And that's where I think the FCA, we're going to hear from Matt in a moment, can really, really assist with this process and get to the bottom of what this report has identified. The other thing I should just say is, of course, with the introduction, we haven't talked about so far, of the consumer duty, which let's just say has mixed views. We have some people saying it's absolutely going to solve everything. Other people saying, you know, it's not. It's obviously taking up a lot of time. But I do think it's going to be important, actually, in terms of focusing the minds of those in financial services about whether they are achieving good outcomes and fair value, obviously for consumers. And what we're talking about today in terms of the price of insurance absolutely has to be one of these things that the consumer duty will be very important in terms of unraveling some of the issues that the report talks about. At the ABI, I also chair something called the Consumer Committee. And we have the Consumer Advisory Group, which I think Fair by Design have absolutely been a part of, and other organisations, including, for example, Citizens Advice, because and this is a relatively recent introduction into the ABI, because the voice of the consumer wasn't always being heard in the way that it should have been, and therefore we absolutely want to make sure that's the case. And one of the things that's come out of it, obviously talking about pricing today and the poverty premium, But I think one of the other barriers for insurance is frankly just understanding what it is that people are paying for, what the terms and conditions are in a language that people who don't have a degree in financial services can understand. And that's why at the ABI conference last month, we launched a report from Fairer Finance helping us in terms of how do we make sure that the policies are drafted in ways that people really understand what they're getting and are genuinely able to compare different products to know what it is that they are paying for. And there's more work to come on that. So I think it's fair to say that the industry wants to work with Fair by Design, SMF, FCA, Treasury and all to tackle this. The report also rightly talks about some social problems, which obviously the insurance industry can't solve, but there may be things where they've got the information and data to shed light and to assist. The point about single cover is absolutely something that should be tackled. And Martin, maybe that's something that we in the Consumer Committee and Consumer Advisory Group can take forward, because there's no doubt that there are obviously times when people are potentially having sort of paying for double protection for things if they are able to afford household insurance as well, but also taking out expensive single item insurance. And I think that would be where good information absolutely plays its role. There's a recommendation in the report about, for example, the government, one of the interventions could be having insurance vouchers for people on low incomes or perhaps on certain benefits to help them to pay for insurance products which are essential. For example, somebody, the government has to accept that I think if you want people to apply for a job for which transport is essential, we know there are parts of the country, many parts, where public transport just is not an option. Therefore, people have to have a car. Therefore, in terms of assisting them, for example, with motor insurance, perhaps there is more, likely there's more we could do on that. I think that's probably, James, all I was going to say in response to the report, but it's a really useful piece of work. And I agree about, how can we all take this forward so that, Martin can tell all of those who helped on the survey that actually real action is resulting.
Thank you very much, Nicky. Now, before I go to Matt Brewis in a second, I should say questions are starting to come in on the Q&A panel. Please do keep asking those, because I'll try and, when we get into the question session, I will try and summarize some of the themes and points and put that to the panel. I may bring some of you in directly on camera, but please do keep bring those questions in. Our final speaker is Matt Brewis, who's managed a very busy weekend thanks to recent events in the financial system. Matt Brewis, Director of Insurance Supervision Policy and Competition at the FCA. I should say extra bonus points to Nicky Morgan for being the first person who's called to mention the consumer duty, which is a big and important and as yet inadequately explored bit of future financial regulations. We're keen, if possible, to hear from Matt and others about the consumer duty and how it's going to apply in this case. But Matt Brewis, thank you very much for joining us, especially as after a busy weekend helping with the SVB fallout.
No, thank you, James. And the problem with going last on all of these things is everyone's stolen the best lines. So if we can just assume everything that you agree with that's been said, actually, I agree with that as well. But this is a really important report and sheds a light on a really significant issue. And I think it makes for really sober reading for all of those within the insurance industry and all the stakeholders in it. And we have at the FCA a big role that we can play in this, and the report makes that case well. It talks about the social policy, regulatory and firm responsibilities to ensure markets work well for all in society. So I want to briefly talk about 3 interventions that we've made, which will have some impact on these issues and these interventions we're kind of in the process of making as we consider what else we can do. So we have consulted on rules that require insurers and intermediaries to take action to support customers in financial difficulty. We've introduced higher product standards, and that will come in even more so under the consumer duty. And we have begun publishing value measured data, which focuses on single issue products. So let me just talk about each of those in turn. So in terms of consumer duty, when that comes into force at the end of July, it will require insurers, as well as all financial service companies, to put their customers right at the heart of their products. And I'd argue that these new rules will play a part in helping with some of the issues that we're discussing here. It requires insurers to define target markets to ensure products meet the needs of their customers and support their understanding and the products that they purchase. And the FCA, I think it's really important to say, can't force firms to write business that they don't want to write. And so in that sense, there's a bit of a limit on what can be achieved through regulation alone. But as Nicky was saying just there about collaboration, we want to support and work with firms and all stakeholders that want to provide a business that provides insurance to all consumers. I think one of the things that really stood out for me in the letter was the section on premium finance. This is not a new issue, and it's one that I've recently written to CEOs about when we wrote at the end of last year about the cost of living and where we have concerns. And we expect the price that's charged for paying monthly to be proportionate with the kind of credit risk, the cost of providing that service, but we see that as pretty limited. And so it's not really apparent to me why it's appropriate for APRs of 30% or above to be charged to consumers. But that said, we need to be thoughtful about any intervention we take. So if we were to cap, ban, take other action on premium finance, actually one of the unintended consequences could be we see a reduction in the ability for people to make monthly payments, and it would make it even harder for those who can't pay or afford to pay for insurance in one lump sum to be able to do so. So we need to consider all those options, working with firms to understand how to ensure that those kind of facilities are still available, but at a reasonable cost. Now, we have seen some positive progress over the last few months. We've seen a number of offerings come to the market aimed at those in rental housing or social housing, which don't have any excesses attached to the policy in the event that you need to make a claim. One of the examples in the report is talking about the 5 million people who have struggled to make a payment of £500. That's kind of about typical excess payment for most policies. So even if you were to afford the policy, not being able to afford to make the excess payment kind of renders the ability to claim useless. So there are many areas where we need to focus. That's not just on the initial price of the insurance, but the costs that are there throughout. Finally, just on single product insurance, last year we began collecting and publishing value measures data, which looks at single certain product lines and single items. And here we found quite a lot of products that were offering poor value, where claims that were paid were pennies on the pound of premium taken. And we're undertaking a review of a number of those, and we'll shortly be publishing a report on that, because I think this is a really important area that the report highlights where we need to make progress. So just want to commit to working on all of these important issues with all the stakeholders, government, industry, social market foundation, Fair by Design, so that everyone has the ability to benefit from insurance at a fair price and for the markets to work welfare for all consumers. Thank you.
Thank you very much, Matt. Now, so we're into the questions now. I've got people are typing questions, but if you've got something you want to come in with on camera, do put your electronic hand in the air. I'm scanning the participant box. We've got 110 of you in the room, so it'll be tricky for me to keep an eye on everybody. But please do put your hand up if you want to come in. Before we come to a couple of questions, Matt, can I just get you one thought from you? Now, before she left, Tulip gave us a fairly clear sort of line that her Labour Party or her Labour Party takes the view that the FCA should be investigating this issue. Now, I accept that your position as an independent regulator means you can't respond directly to that. But I'm just wondering, is there any could you comment around the topic of what you heard from Tulip there about the sort of investigation that she was hinting at and the sort of information she says she thinks that other policymakers should have on this topic, and how far you can and will go to provide that sort of information?
So look, it's worth consideration, and I've given examples of where we have been taking action. Last year we undertook the GI pricing review, looking at home and motor, and we're committed to reviewing that next year. One way of kind of two birds, one stone, is using some of that review to look at, we need to gather a huge amount of data in order to do that, and whether or not there's we can use it to see how this is working effectively for consumers. So there are different ways that we could do it, but it's an area where I care personally about it, and my colleagues do, and we are already undertaking some pieces of work, as I've just explained, around this, but there's certainly more to do.
Thank you, Matt. Now, actually, I'm going to try and summarise a couple of questions that have gone in the Q&A panel, both actually on housing. I'm going to bring those to you for you first, Matt, then the rest of the panel for their thoughts on them. So I'm going to try and bring the two thoughts from a couple of doyens of the industry, if they don't mind me saying so, John Godfrey and Johnny Timpson, who are talking about greater provision of contents assurance for social housing tenants. John is talking about the idea of effectively an auto enrollment scheme to almost bundle cover with your tenancy, and Johnny's expanding on that point to say actually there are issues with FCA bundling rules. So I'll spot you unfairly, Matt, and go to you first to see whether or not you think there is scope for a more innovative application of regulation around there to allow that sort of product offer to be made. And then I'm going to come back to, in no particular order, Nicky, Morgan, Matt Oakley, and Martin Coppack to talk about that idea of innovation, and we've mentioned a couple of innovative solutions in the report. Other innovations that we can and should come up with to allow more people to get access to insurance. But Matt, on the narrower points about bundling and bundling around social housing.
Yes, the answer is simple. Yes, we can. If there's a proposal out there, then we should look at what we can do in order to make it work. And as I mentioned, there are a couple of products that have been launched recently focused on this, and there's definitely room for more. So if there are things that we can do, we do it all the time when it comes to innovation, how we can look at changing our rules to make it work most effectively for consumers. Definitely.
Right. Well, fine. I'll go away and talk to John and Johnny, and we'll knock out a pamphlet proposing that very thing. Publish it. You can come back and respond to that later in the year. Thank you, Matt. Nicky, how can policy and regulation sort of promote more innovative solutions in the market here?
Well, I think it goes back to, and I'm not an expert in insurance risk pricing, but it does go. I mean, Matt made a very interesting point, which is that the FCA can't force insurers to write business they don't want to write. Most insurers are obviously commercial organisations, will have either an overseas parent looking for a return on their investment, or shareholders looking for a return on investments. So you either have to have a company that is determined that it will have a social element to what they do, and will make a particular, it could be, for example, like pension auto enrolment, saying actually we're going to get into this market in terms of insurance auto enrolment. Or you end up with a situation where obviously you have somebody, often it's the government in the case of flood re and pool re, for example, where they will step in and provide some sort of backstop in order then for the market to say, actually, we will take on this business. But it's certainly not impossible. And of course, these days with InsurTech, for example, there may well be business models where actually the cost of running the business are lower, and therefore people are able to get into different parts of the market and see commercial opportunities. So I think there's a lot more of that. How do you incentivize? Well, obviously things like the FCA have their sandbox for certain tech products, and I think being open and allowing certain providers to take a bit more risk, for example. I mean, on the one hand, of course, you want insurance companies to be rather dull and not very exciting companies, because often you need to know, and we've seen it with SVB, for example, what can happen, very quickly in another part of financial services, where actually some investments they've made suddenly turn out not to not to make such great sense when the market changes and suddenly actually they can't pay out to depositors, and you absolutely don't want to end up with that in the insurance sector. But equally, you also want to incentivize people to perhaps try new things and be innovative. So that's why I mentioned things like, for example, the insurance vouchers for certain benefits claimants, for example. There will be other products, as well. And I think perhaps working together to incentivize that innovation and to be quite specific about it. And undoubtedly, the trade body has a role to play in making sure that its members are both aware of that and also encouraged to do that by politicians and by outside organisations, putting some pressure on, which I think is exactly what Fair by Design are rightly doing.
Thank you, Nicky. I'm going to go to Matthew Oakley for a very quick overview of some of the, just a recap on the innovations that we've floated in the report. Nicky mentioned vouchers, we talked about state provision, anything else, and then I'll go to Martin Coppack before I try and up some another couple of themes from the Q&A panel.
I think most of them have probably been covered already. I think we talked about vouchers, much like childcare vouchers, where it might be part of an employee benefit package, where for people on low incomes in work, equally a similar sort of scheme as Nicky was saying around people on benefits and out of work. What I think, potentially is going back to collaboration. There's a space here to think actually if as a society we think that the social benefits, the economic benefits, personal benefits of the sorts of financial resilience that insurance can provide families is really important, and I think it is, we should be collaborating, putting our heads together and trying to innovate in this space and come up with ideas that can actually fix this problem. By no means what we put in the report, that's by no means exhaustive, but I think it's a good starting point. Equally, if you're talking, as I know some of the questions in the Q&A have talked about around kind of auto enrollment as part of a social tendency, there's no reason you can't think of an auto enrollment as part of a benefit claim. So it's those sorts of ideas that you might start to think about in a space where you think there's a really big benefit to be had from getting a take up much higher amongst certain groups of society, and then trying to think about how that could actually be facilitated.
Thank you. Martin, innovation.
Sure. Well, it's really interesting because Fair by Design obviously does quite a bit of lobbying and campaigning on this issue, and everybody's favourite word is come up with an innovative solution. And I'm afraid sometimes it's very difficult to come up with innovative solutions because we have to face it, sometimes poorer people are more costly to serve, and actually you can't make much money from it. I've been invited to so many fintech events. I've started to say no to the fintech events because I'm asked to give the problem statement, but I'm being told that's not the statement really we wanted to look at. We have to face the fact that innovation can only get so far. And I just want to mention here that Fair by Design, we also have a fund where we invest into new initiatives to design out the poverty premium. Can I just say it's really slim pickings when it comes to insurance. There's only so, and I hope that gives also credibility to the words that Fair by Design says, that we are pro-competition, we'll put our money where our mouth is. But at the end of the day, competition can only stretch so far. And if I've heard people correctly today, the ABI and Tulip was saying the only way really to break this policy ping pong is to come on, let's look under the bonnet of the insurance. Is it a social policy question or is it a regulatory policy invention? It's probably a bit of both. But until we do that, I'm going to still be saying this in the next 2 decades as well as the past 2 decades.
Well, obviously, you're always welcome here, Martin. We hope your life's mission will have been concluded before then. No, the next question. Sorry, I was going to go a question from Dave from Citizens Advice, but it literally it disappeared from the panel. As I was turning to it. I'm sorry, forgive me.
Sorry, It's my fault. It's in the answers section now. So
okay, so I'm going to start. I'm going to read that from Dave Minister Costa from Citizens Advice. At Citizens Advice, we continue to see an ethnicity penalty in motor insurance of £250 based on the location where people live. Do the FCA and ABI, and I think we're accepting that Nicky has a role at the ABI, but he's not a spokesman for the ABI, agree that use of postcodes in calculating premiums can potentially lead to bias and that this should be investigated alongside the poverty premium? I don't know who wants to go first on that wider thought of whether or not pricing based on postcode does actually have an interrelation with ethnicity or not. I know this is a relatively heated topic,
well,
so I'm sure we'll all approach it carefully and collaboratively. But Nicky, your
yeah,
thought.
no, look, I'm happy to address that. And there was an earlier question about the Citizens Advice report as well about the ethnicity. But look, I just want to be really, really clear that the ABI, in issuing a statement on that Citizens Advice report, was very clear that ethnicity is not and cannot be used as a rating factor. It will be a breach of the Equality Act. It's the same as gender, for example. But what David's point obviously talks about is the postcode issue, and there will be other rating factor issues as well. I mean, go back to Martin's point about, we're not going to get to solve this or move towards it without lifting the bonnet and getting those details. So the question that we've discussed with Martin before is, how do we lift that bonnet in a way that doesn't fall foul of competition law, but also does allow for investigation? It's a bit like the debate with tech companies and their algorithms. How do we get them to tell us how they're serving up harmful content without them divulging publicly how they serve up such content, for example? So now, does postcode, does where you live have a role to play in terms of, for example, the pricing of insurance? That's not an issue, not something that I can answer today, but it's a good question which should be debated. And I think that's something that the sector and the industry could absolutely go into more detail about, with the prompting probably of the regulator and the Treasury and others to decide whether that is right or not. It goes back in a way to, that's when it becomes, I was going to say, more of a social thing, but it might be a rating factor, but actually, is it right that there are certain postcodes where, for example, there's more likelihood of a car accident or a car theft, and therefore, people would pay more, and certain places where that doesn't apply? And that's just one rating factor in terms of the way that I think insurers price. So absolutely, from today, let's have that debate.
Thank you. Matt Brewis, what's the role in that? It's entangling.
Sure. No, look, if we're going to look at poverty premium, this is an important part of it, and it needs to be part of the wider debate. Absolutely. I mean, as a society, Food Equalities Act, as Nicky says, we have determined that sex and ethnicity are not factors that should be taken into account, and we've decided as a society that those are things that, even though women on average live longer than men, it's not something that can be taken into account when you look at life insurance, etc. That's what we've decided. If we were to decide as a kind of society that actually where somebody lives is not a risk factor or something that should be taken into account, then so be it. In terms of but the knock-on impact is, it means that there is a redistribution of who pays the premiums as a result of that. Marginal, most likely, but it does mean that all insurers will say that there are postcodes where you have higher claim ratios, and as a result, they have higher premiums attached to them. So if we were to take out that risk factor, then it would have a redistributional effect, and that's not something I think any firm will be able to do on their own. Sorry, a firm could do it on its own, but it would knuckle the models out compared to everybody else. It's something that would have to be done across sectors, and probably would actually, sorry to ring Martin's bell, but is a social policy issue, but it could be well informed, absolutely, by the insurance sector.
Thank you. No, Martin Coppack has a 1 minute thought to contribute to this. Now, unfortunately, I'm actually going to have to wrap things up. But Martin, your minute on ethnicity and postcodes.
Absolutely. So I think it's the opacity question is the big thing here. Let's not forget, even if it's indirect discrimination, it's against the law. So we need to actually clear this up. And the only organisation who can clear it up, FCA. So, and I don't want to misquote you, Nicky, but you're fantastic chairing of the access to financial services products. If I remember rightly, you challenged the FCA to look into equality implications. I think it might have been around travel insurance. I can't remember exactly. And I believe Chris Wallard said there and then that the FCA has the capability and capacity to do this. But later they returned the letter to your committee to say, this isn't our job. This is the EHRC, Equality Human Rights Commission. Ping pong. Thank you.
Right. Thank you. That was your minute. I've got 1 minute left to wrap things up. Unfortunately, and disappoint a lot of people who put some very good and thoughtful questions in the Q&A section. What we will do, we will keep that, fortunately, and we will pass all of your questions on to all the panel in the hope that we will find a way of conveying responses from the panel to individuals. Data protection, email restrictions allowing. In particular, there was a very good question on price comparison websites I was keen to get to, but I'm afraid I haven't been able to in the time. So all I will actually do in the time that we've got left is to thank all of our panel, thank Tulip in absentia, but thank Matt Brewis from the FCA for his contribution at the time. Thank Nicky Morgan with her many hats on and vast experience, all the contributions she's made to the conversation. I thank my colleague Matt Oakley, who both our names are actually on the report we published today. He did all the work, to be honest. So thank you, Matt. And finally, to thank our friends and partners at Fair by Design and Martin for working with us on this and for continuing to push this issue. Thank all of you very much for joining us today. Not the end of the conversation. We will continue to investigate this to work more. I hope you again at SMF electronically and physically. We have a new office in the heart of Westminster. You'll be welcome to on future events. But I think that's it. Oh, and also final word to Zahada, who from the video has also actually been with us, I believe, on the call. I'm looking through my list. So yeah, Zahada, thank you very much for sharing that with us, and thank you for coming, for joining us today. But yes, thank you all. Have a very nice rest of your day. See you again soon. Take care.
Thanks, James.